And we are live. We're waiting on Quran. We think he'll be here soon. And then we could have 2 weeks in a row of 5 people, but we'll see. It's coming down to the wire. But we got a lot to talk about that we didn't get to last week. We wanted to talk about SRG, but you guys wanted us to talk about our best ideas, and we were scheduled for it. So we're going to be talking about SRG today. But before we do that, always want to remind you guys to check out the links in the description below for Seeking Alpha. You can get a discount link to their premium service to where you can read all their articles without any limits or anything like that. And there's a lot of good stuff for individual holdings if you're looking to just get some different perspectives on it. It's a nice platform for sure, especially for some of these kind of niche value names. So definitely check out Seeking Alpha using our discount code or discount link in the description below. And then also check out ShareSite, where you can do your portfolio tracking through their service as well. They have a free option, but if you want to upgrade, that gives you a discount as well. And that goes a long way towards helping the channel too. So we can keep paying our StreamYard fees. So, and also just an announcement, if you guys didn't see it, we did put out a community post. We are looking for an editor specifically for short form videos. So if you're interested in doing something like that, we're trying to find new ways to improve the reach for this channel and kind of this whole brand of punch card investing. So if you're interested in that, definitely reach out. You can reach out to our new Instagram. We haven't posted anything yet, but it's at punch card investing on Instagram. So go check that out. And again, we're looking for a short form video editor and also someone who could help us post just the audio version of this so that we can actually finally get a proper podcast version going. I know a lot of you guys want that, and we do want to fulfill that desire sometime soon. So if you're interested in that, please reach out. And it would be a paid opportunity, to be clear. So again, that's at Punch Card Investing on Instagram. Like, comment, subscribe, and let's kick this off.
What an intro!
Yeah,
we've got a super chat as well. What a start!
It's a great show. Frank's in the house, so that always helps. But thank you, Jason.
Frank, you have an admirer. Did you ever think you'd have an admirer in Jason?
What an admirer to have. He must have missed last week's episode when all the boys were here.
No, he was here. Yeah, I was talking bad about Carvana, and he heard it, so I knew he was there. Should we start with I don't even know what to start with here, but I guess just that if you guys hadn't heard by chance, SRG announced that they're trying to liquidate the portfolio. It's going up to a shareholder vote. And if that vote is successful, they will attempt to sell all of their real estate and wind up the company and distribute all the leftover cash to shareholders. So big announcement for sure, especially for those of us who were in kind of the liquidation camp, the liquidation value camp, which is a lot of people in SRG. That was a big part of the thesis. And it seems to be, I don't want to say coming true. We got to get through that vote first, but definitely a huge move towards that. So that's kind of setting the scene. But where do you guys want to start? Valuation, risks? I don't even know where we should start with this because it's a big announcement.
Yeah, maybe we just talk through some of the details of the announcement first off,
sure.
Just so people can get a feel for it. So Seritage, if you've been living under a rock, you might not know this, but Seritage obviously is all the real estate that used to be with Sears. They've been trying to redevelop a bunch of these properties forever, sell some properties they don't want to redevelop to kind of fund the redevelopments. And they're kind of giving up, I think, to do a liquidation instead, because there's a big disconnect, I think, in most people's eyes between the price of the stock and the value of the assets. So shareholders are going to vote on a liquidation. We need, I believe, 2/3 approval from shareholders to go through with the liquidation. We already have 29% approval purely from Eddie Lampert. He's signed an agreement saying that he'll vote in favor of the liquidation. They've given a range that they think they can generate anywhere from $18.50 to $29 per share. And it's going to be over an 18 to 30 month period is what they think the timeline could look like.
And then here's their SEC filing. And they're trying to vote on in their annual meeting on an approval to sell everything, as Tom was saying. What was the deadline on it again? When is this meeting coming up?
I actually don't know that I've seen a date yet, unless I've missed it. I don't know that that's popped up. Could be wrong though.
Whenever their annual meeting is, which will be before the end of the year, I guess.
Yeah, yeah. It was actually interesting. If you read through some of the details of this filing, they've actually got 50% of their real estate in dollar terms already on the market before this shareholder vote goes through. So
they're already
some pretty
underway.
big moves.
Yeah, because they could still sell all the real estate without shareholder approval. It's really the dissolution that's the big thing, right? That triggers that vote requirement. Because they could sit on cash if they wanted to, I guess. But the whole idea is giving it back. At least that's what Eddie seems to want.
Yeah, I guess that they could continue with a very small number of redevelopments and, do I guess like an equity Commonwealth style thing where they liquidate almost all of the assets,
Yeah.
but don't liquidate the whole thing. But yeah, they clearly want to get rid of 100% now. And there's also a couple of new directors, it's probably worth saying as well. So Eddie Lampert's no longer on the board. There was one director who came in earlier in the year who previously was involved with the liquidation of, I think it was called New York REIT. And there's another new director that seems to have quite a big background in real estate transactions as well. That's kind of just come into the picture.
So there's been a lot of churn in the board in the last couple of years. That's probably a big reason they probably don't. Yeah, that's probably why they don't want to do so much with the redevelopment project, because it's just that's such a tall order for anyone, especially with a team that hasn't necessarily worked together. So that could be a big driving factor too. By the way, I just want to acknowledge James with another super chat, this time in dedication to Brad and his hat. So thank you, James.
Nice. I think James is a pretty consistent viewer. I actually plan to wear a hat as well this week, Brad, but then I remembered that I have headphones that go over my head. So I'd planned to rock the NetJets hat, but
ooh.
Did you not put the headphones over the NetJets hat?
Yeah, I did, but then it was like squishing the top. It looked a bit weird.
Okay.
So,
gotcha.
Yeah,
we should all get like Carvana hats for Jason. That would be fun.
Yeah.
If I buy a car through Carvana, I'll get a Carvana hat. I'll wear it for at least an episode.
Yeah.
Nice.
Tom, a question for you. With those 50% of the assets that have been listed, what part of the portfolio is that's been listed? Like, is it the premier mixed-use properties or multi-tenant?
Yeah, I don't know that they've given that detail. There has been some, I guess, they're putting it out. They're obviously advertising some of these properties. So we've seen the odd article being written about big listings. I think they listed, I'm not sure if you know this, Brad, but something like 38 different retail properties. Do you know the details on that, Brad?
I don't know the details of that, no.
Yeah, I don't know that they've given specific info to shareholders on that, but we've seen bits and pieces in news. I haven't seen any of the premier developments come up yet. It's mostly been the standard Sears box and surrounding car park type properties, from what I can tell.
Yeah.
And what kind of cap rate, I guess, are you expecting on those? Well, that's the multi-tenant retail. Is that what they put it as under their assets?
Those 38 that are on the market?
Well, just the ones that you're describing, the ones that we have seen advertised, or...
Yeah, those are just, I guess, straight retail properties. And I think a lot of them are, a lot of them will be vacant as well. Like Seritage has a mix of reasonably high quality properties and some very low quality properties that could be hard to move at attractive prices. But they said that exact thing in this filing. It's not like they're unaware of that reality. So,
well, Chris here brings up a question on valuation. Any leading theories why the market price is still under both the alleged value, if we're to believe our own projections on the real estate, but also the stated liquidation value? They said, what was it, 18 to 29 per share, something like that?
Yeah,
I think that was the range. That's what they're claiming that they can get. So is the market better? Is the market betting on the properties being sold for less than they're valued? Because if we take a look at the stock chart, we can see that it is currently at about $11. That was after a pretty big rise up from $5. So if you bought in down there, you're doing all right. But a lot of people bought back here, so just trying to recover, I suppose. But
Yeah,
we can
I
talk
mean,
about some of those factors.
Yeah, I mean, there's always going to be a gap. I mean, if you look at something like a much more straightforward deal would be something like the Activision Blizzard, deal with Microsoft. That's relatively simple, where you've got one buyer, you've got, I guess one kind of big asset. You've got the balance sheet of the business acquiring that, that asset, and
And
you've
the
got
contract
kind
price
of
is
some
set.
timelines.
The contract
Yeah,
price.
and the price is set, exactly. So
Right.
anytime you lose some of those things, it creates more uncertainty, and naturally the gap's going to be wider.
Not to mention cash drag as well. They still have debt to pay, so you got interest costs that are adding up too. So yeah, that's another thing. It kind of depends on how fast they sell them too, because those interest costs aren't going to slow down.
And I think you could also take a more conservative valuation of the real estate assets. I guess even Seritage, what are they saying, 18 to 29 or whatever it is per share of value? I think some people would assume it's a little bit less. It obviously has been a popular short stock, and if you read any of the short thesis about it, they'd say it's closer to $8 or $9 per share. I think that's probably overly pessimistic, obviously, but not everyone thinks the portfolio is worth as much as Seritage are suggesting.
How much debt is left again?
1.5, is it roughly?
Yeah, so there's 1.44 billion of debt to Berkshire, and there's the cost to liquidate the preferred stock would be 70 million as well.
Jack, what have you seen with cap rates kind of in the retail space lately? Have you noticed any trends over the last 6 months or so?
Well, they're not falling anymore, but cap rates are still quite low, which would mean properties are still pretty expensive. But you're getting to the point, not so much with retail, because retail cap rates have been typically quite a bit higher than say multifamily or industrial, which tends to have much lower cap rates. But they've been pretty steady now, and it seems like something's going to break soon because interest rates keep climbing. Though they have fallen in the last week, but interest rates are kind of hovering around that 5.5 to 6.5 range. And would probably be higher in the case of something like a vacant piece of retail property, if you're trying to finance it. So you got to get a pretty high cap rate on that. But if it's vacant, it's gonna be hard to finance on like your typical long-term financing. You got to kind of stabilize the property first. But to answer your question, you haven't seen a ton of movement upwards in cap rates, but you have seen the upward move in interest rates in the last couple of months, and that's going to put pressure on all real estate. So that's probably a big reason why they're tempted to just try and sell now rather than wait for things to potentially get ugly, because they have that big debt load to worry about.
Super chat.
Yes, I was going to acknowledge Luis. Thank you very much. We're getting inundated with super chats. They just keep coming. Thank you, guys.
Yeah. It seems to be quite common that we get super chats with no question or anything.
Yeah.
I don't know if StreamYard's not sending that through to us properly. Or...
You got that right to ask a reasonable question and potentially unreasonable, potentially.
If you want to know if you want to know what sort of beard oil Frank uses, that's the type of that's the effort you'll need to go to get that sort of question answered,
Yeah, we don't give that out for free.
Yeah. I wonder if it's worth sharing some of the maths on this. I did a few calculations and stuff before this video.
Reevaluations, or going off the old stuff?
No, so this is just looking at what sort of asset value is implied by the $18 to $29 a share range that Seritage have given us, basically. So obviously the debt is known, the preferred stock is known. They've told us how much cash they think they can distribute. So we can kind of work backwards and figure out not necessarily the asset value directly, but I guess the amount of assets that would be remaining after they've paid, more interest for a couple of years and had some admin costs and paid staff and so on. So I can kind of share that here if you like.
Yeah. Do it.
Let's see.
Nothing like a Tom spreadsheet.
Well, apparently on the process one, I messed my maths up slightly, but hopefully hopefully the point got across. Can you guys see that?
Yep.
Perfect. Right. So, I guess the first number we can figure out reasonably simply is this cash available for distributions. So that's just using $18.50 for my low option here times the shares and OP units outstanding gets us to a little over $1 billion. And the Berkshire debt and the preferred stock is known. So we can kind of work backwards and figure out this asset value after, servicing all the costs they'll have over the next couple of years gets us to about 2.5 billion with that $18.50, number. If we move up to $29, that implies more like 3.1 billion. And from the previous valuations that I've done and that I've seen Matt Peterson do, that was getting closer to like $4 billion. But obviously there's going to be some costs that will pull that number down over the next couple of years. And I don't know, maybe me and Matt have been a bit optimistic in the past. I'm not sure, but that's a nice kind of reference point just to get a feel for what Seritage are talking about here.
Yeah, and you do have to keep in mind they're not a REIT anymore, so there is corporate level tax now, which they would have not had as a REIT, generally speaking. So that's something to keep in mind. They're going to have some sort of corporate taxes on profits, and but weren't we talking last week about?
That
they're doing that special liquidation entity that treats it as though it's just like it'll only tax like capital gains rather than taxing all income or whatever.
Yeah, so if they can convert to, I forget the legal term for what that's called, but if they can convert to that like liquidating type entity, there'll be no corporate tax. And I don't know, it might be worth pulling up a balance sheet or something if you can, Jack. But I mean, Seritage has been losing money for so long; they have quite a bit of breathing room with net operating losses before they'd actually pay tax as well. So that's worth noting also. But it's interesting. Like this, hopefully lays out the leverage embedded in Seritage. They've got, in per share terms, maybe $45 to $55 they think they can generate from these asset sales, and then they've got $26, $27 of liabilities, leaves that kind of net amount. But it just goes to show, like, if we're even modestly off in either direction on the asset values, like if I drop this to 2 billion, all of a sudden the liquidation value is only like $8 or $9. And if this was 4 billion, so it's 4 billion, you're getting to like $40. So it's very, very leveraged to whatever those asset values turn out to be. So yeah, that's hopefully gives people a bit of a feel for the numbers.
Yeah, no, this is helpful. Pull up the get the balance sheet right here. Whoops. There we go. Looking for isn't there like a tax liabilities line somewhere?
I guess is it that negative retained earnings, maybe?
Yeah, it must be
how it shows on here. Like 600.
Where was it again?
600 million.
Yeah. So that's their losses.
Yeah.
So yeah, they do have some room.
Yeah, but if this vote goes ahead, I don't think tax is going to be an issue, at the Seritage level at least. Investors will have to do some digging on their particular situation and cost basis and stuff if this does all go to plan. But I don't think it'll be Seritage's problem.
I do wonder how quickly they can dump because it does depend on price, of course. It always does. They charge a super deep fire sale discount price, then it'll sell faster than if it was a premium price. So but half the properties were already listed. So we're talking about another half. Is the other half, aren't those properties quote unquote better or in more primo locations? Because weren't they trying to keep some of those? So maybe the second half would be easier to sell than the first half with that in mind.
I really don't know.
I'm
I don't know if
spitballing. I'm
we've
not
got
too
that
sure,
level of
but
visibility. Yeah, there's definitely some stuff in there that that you think would be pretty liquid as far as commercial real estate goes.
yeah,
But
yeah,
there's some dogs of properties in there too. That's for sure. But
yeah.
hopefully that's more than accounted for in the numbers we're talking about.
I have a feeling they're going to give away kind of a lot of properties for free and pairing them up with those nice ones just to make it easier to sell the not so nice ones. That'd be my guess. Or free in quotes.
Yeah.
pairing
Cigar.
it with a more expensive property. Yeah. Okay, we got
Another super chat.
another super chat from Luis. This time with a random question. Favorite non-investing YouTube channel?
Yeah, so the first thing that came to mind for me, have you guys seen Mr. Ballin?
No.
So it's like,
Oh yeah, the scary story guy.
yeah, scary story guy. Do not
Yeah, I've
start
seen him.
watching it unless you want to invest a lot of time, because it's I don't know. I got sucked in. I don't watch it anymore. It was pretty good for a while.
I'm assuming that one's not kid friendly, Brad.
Probably not. It would probably give a kid nightmares most of the time.
Okay.
But yeah.
I'm looking at my list. Because it's 90% investing and like business type content. So I'm trying to see.
So my son, who's 3 years old, really likes this channel, Helper Cars. It is so catchy, it's ridiculous. It should probably be illegal for kids because it just hooks them, but it seems wholesome enough.
Yeah, I don't know. I've got a couple, I guess. I watch a few streamers and kind of mostly through their YouTube uploads rather than their live streams. So Ludwig is one of them. He makes some good content too, beyond just his live streams. And then I don't know, CoffeeZilla is another one that I think Jack you introduced me to.
Yeah, he's great.
I watch that's kind of finance almost.
Yeah,
I guess.
he covers so much crypto, it kind of is.
Yeah. Otherwise, Philion, spelled with a PH. He similar style to CoffeeZilla, a lot of exposing things, but less of the finance related stuff. So there are a couple.
Kind of on the same note, Spencer Cornelia, he's kind of investing, but he's in that same vein as CoffeeZilla, but he's really good too. See some of mine.
What is the gist of CoffeeZilla?
What's the gist? Basically covering scammers, fake gurus. That's kind of
that kind of stuff. Yeah,
and he does it in a very engaging way, and he goes really deep sometimes to where he's kind of the guy exposing the actual potential scam. It's very interesting. Puts a lot of effort in for sure, and he's pretty funny. I'm looking at my list here. I occasionally watch like a good amount of cooking content.
I was about to say the same thing.
Yeah, like Adam Ragusa has become a favorite of mine. He does like a lot of like really easy recipes, or easy to follow recipes, I should say, and he does a lot of like food science and history stuff. So it's kind of interesting. Speaking of history, I started watching this very weird channel called What If Alt Hist, and it's this guy who he's very dry, but he like goes really into detail on like, world politics and ideologies and stuff, but it's super dry, but he's really smart and interesting to listen to sometimes. But and
so is it like, what if this one event was different?
That some of his stuff is alternative history, but others is kind of like, he does a lot of fortune telling, like what might happen in the future if this and this happened, and then he'll like look to the past and give examples. It's often very dark, but it can be pretty interesting if you're into that sort of stuff. And then I guess one more I'll point out is I like a lot of the urban planning stuff. So like Not Just Bikes is a really good channel I've watched quite a bit of in the last year. And he talks about like, I'm going to Houston, which is like pure car centric, like no transit whatsoever. And he talks about how that's bad, and then we'll talk about different cities around the world that do it differently. He's in Amsterdam, so talks a lot about bike infrastructure, walkability, and all that stuff, and how to plan cities, and it's interesting. So I'll name those three and leave it there. Watch a lot of MLB as well, Major League Baseball.
How about you, Tom?
Yeah, I watch
Is
a lot
it
of
all
fishing
investment all
stuff.
the time?
No, it's I was just like checking my feed for which like fishing channels I watch. There's quite a few of them. That's like most of my non-business or investing YouTube watching really. So there's a few New Zealand ones if people are into this. There's Ultimate Fishing or The Lateral Line, are both pretty good.
We get niche here.
I also watch Robert Fields. I don't want to get this wrong. I think he's American. He may be Canadian. So no offense, Americans or
None
Canadians.
taken.
But Robert Fields and Morningside out of Australia. There's like three of them who all now have their own separate channels. They're pretty good as well. So that's pretty much my YouTube feed.
I've sent you guys some of the John Boy Media breakdowns. Have you enjoyed any of those? the guy who like narrates, he broke down like cricket that one time.
I haven't watched much.
Okay, sure.
Yeah.
He's a good like sports channel. He covers mainly baseball, but he'll like break down random sports. Really, really funny channel. Yeah.
Another couple I watch, Cody Ko and Noel Miller. They have a podcast together too. But both their YouTube channels are really entertaining. I guess kind of some of that mindless type of entertainment, but both funny guys. So
look at the range we have. We're
and golf. I got a lot of golf dudes too. Rick Shields, he's a man.
Oh yeah,
Everyone likes
Shields is
golf.
good.
Hey guys, thank you, Luis, but we have to move on to something because wait a second. Is that Karan Kernani?
Oh my God.
He's entered. He's entered our stream at long last. He's awake. Did you sleep well, Karan? We're so glad you could join us in the second half of the show. So we can close it out on.
Have I skipped all the difficult questions?
Say what?
Have I skipped all the difficult questions? Like,
Yes.
We've saved some for you. Yeah.
We got a +1 for John Boy from Mike Sharp.
All right, back to SRG. Should we get back on track here?
Yeah, shall we? What else do we want to talk about with SRG? Any? Let's take a look at maybe some questions. Maybe.
Yeah, I think probably one thing worth touching on is just capital allocation. Because obviously,
is this a good idea? Basically, like.
Well, no, more like what happens with the proceeds when they start selling a lot of properties, and I think it's pretty straightforward. It seems like they're basically just going to prioritize paying down the loan from Berkshire as fast as possible, and then buying back the preferred, and then doing the cash distributions kind of towards the back end of this process.
Yeah.
I thought that was just worth mentioning. Like, if this does get approved, I wouldn't expect Seritage to start paying distributions immediately. I think they're probably going to retire as much of that debt, if not all of the debt, first, but before they start paying cash out. Assuming this all goes to plan, that's kind of what they're thinking.
What are the risks here besides maybe some of the stuff we've already mentioned? They have to sell for less. Is that kind of it? They sell for less. There's interest costs. Is there something else here? I know we've kind of mentioned in passing like the potential litigation shenanigans that could make things awkward. So that seems like a far off risk, though. I'm not too sure. What other risks are there here? Are here potentially?
Well, the biggest immediate risk is what Mike has just commented. They've got
timing.
Well, it's less than 800 million now. I think it's 650 or something. But yeah, they've got debt due in July, so they need to at least come up with that much. That's kind of the most immediate issue. But yeah, if they're selling a lot of assets quickly, you would think coming up with 600 million or so should be pretty doable.
Yeah, I wonder how refinancing would be in this environment. Probably pretty tough. and the rate would probably be quite a bit worse too.
Like if they couldn't do it, you mean?
Yeah, I bet. Well, actually, I suppose they could, if they knew they were going to be selling, they could probably get something like a bridge loan or something, but that would be very expensive in the short term. So I don't think they would, go under if they suddenly couldn't make it. But I think they'd be able to do something to kind of kick the can out for another year. But if they're looking for like nice long-term financing, it's not going to happen unless some miracle happened.
Yeah, I mean it's all with Berkshire right now. I don't think they would move too much around there.
Jason says to take out an M1 finance margin loan, 3.5% with M1 plus.
Yeah,
I think one of the bigger risks is that, well, one, they just can't sell the property, some of their properties. Some of them might be not wanted. And particularly if the macro environment keeps going the way it's going, inflation gets high, interest levels keep rising, then maybe it gets even harder to sell some of these properties. I don't know. I think that, especially if they're paying off the debt first, maybe they get to the point where they do get rid of this debt, but they're left over with some of the crappy assets that they might not be able to sell at all. That would be how I think about it, at least anyway.
So you think some of the properties are worth zero?
Maybe not worth zero, but maybe too hard to sell. So in the time frame that you want them sold by, you could write them off as a zero. Because there is a time frame on this liquidation, obviously. Whatever time frame you decide you want it done by, theoretically, some of those properties might not be sold by then. So you could write them off as a zero.
That's why I'd be surprised if they weren't going to tag like their worst properties with nicer ones when applicable. Because I'm sure they're conscious of that risk. They're left with a couple dozen just terrible properties that are going to take a long time to sell for various reasons.
And then that adds on to the fact they might sell things cheaper than they want to, again, with this time frame issue.
Yeah.
So you get less value overall.
Well, is there any risk that Eddie Lampert swoops in and gets some of the premier assets for less than they're actually worth?
And that's always
Conspiracy theories.
Yeah, that's circulating. Threw it out there.
I had one risk, but then I don't know if that's applicable, but like they might start doing a rights offering or something at some point if the share price skyrockets. They might dilute shareholders, but then again, that's very far out. So.
Talking about rights offering, that's very Bill Ackman of you. Speaking of timing, he just returned all of the money or is going to return all the money for Tontine Holdings SPAC holders. that recently came out.
Yeah, I don't know. To me, the biggest risk is kind of what Frank said. It's trying to sell the properties for a reasonable price and a reasonable length of time. I think, yeah, I mean, I think the Eddie Lampert thing's probably overblown. Someone can soundbite that, in a couple of years when he buys something and sets on the dollar. I know I look like a moron, but I mean, he's no longer on the board. Sure, he's a big shareholder, but I just, anything's possible. But
you feel like a CEO shareholder would, like before. It's like, yeah, we believe in Eddie Lampert, but then he just completely.
Yeah, but Eddie's not running it anymore. That's what I'm saying.
Yeah, but that's what they expected him to come, turn things around, and kind of put it on the right path, and then, well, we know what happened. So.
Yeah, and I don't know. I can't see Eddie wanting to have a repeat of that. I don't think his reputation was improved very much from the Sears experience. Yeah, that's my 2 cents anyway.
Jack, I don't know if you can. I couldn't share it a better way, but I put an image into our group chat, which is just some of the valuation, I guess, from the bullish and even the short aspect of what the properties are worth.
Are you able to just share your screen? I can just put it up.
The StreamYard isn't giving me the proper option to share, which is the only reason I didn't.
I don't see the image in the chat, but
Instagram chat.
Oh, wrong chat.
Yeah, sorry. But yeah, it's from a website called specialsituationinvestments.com, which is a paid service that is pretty good. I recommend it if anyone's interested. So they won't be able to see the whole article, but they did write up Seritage as a liquidation thesis maybe 2 months or a month even before this liquidation got announced. So they're pretty on the money with what was going to happen.
It's a little blurry, but
it is a little bit blurry. I guess the only thing that really matters is the equity value per shares is what really matters in the orange, the dark orange down the bottom. So the optimistic bull thesis, they had $44 per share. This is again after paying back all of the debt. And within that chart, they do have the cap rates and everything else within broken down pretty well. The conservative bull thesis at 17. So I guess those numbers aren't too dissimilar to what Seritage put out. The bull thesis is a little bit higher, maybe more towards the, I'm blanking on his name. Tom, what's the guy? Matt Peterson. Maybe towards his kind of numbers there. But then they have the bear thesis as well, which is, you can see $9 or $8.94 in the optimistic bear thesis. And they do have a possibility of 0, which is a pretty over-the-top bear thesis in my opinion. But they kind of lay out every scenario. I would exclude the one on the right in my opinion. But the other 3 are all somewhat realistic scenarios in my mind anyway.
If you get a market dip, that the 0 could happen, as they could be underwater quite quickly.
The probability is low, but
but it could definitely happen. It's not like it's out of range.
And the $44 per share is almost just as unlikely as well. So you're really looking towards those middle 2, in my opinion. I think if you get 17 or even a little bit higher per share, that's maybe best case scenario.
That does make sense with where the current stock price is at. That's probably what a lot of people are thinking. It
is a stock that has a lot of short interest. So all these people that were short are expecting this kind of $8 kind of range. So I don't expect it to trade too much above that unless we start to see these sales going through pretty quickly at good prices. But again, I'll recommend specialsituationinvestments.com. It's a good service, and that's a pretty detailed write-up, and they nailed the timing.
So where'd that guy's opinion actually land?
He was
quite a
0 to 44, like somewhere.
That's like, I think there's
sorry, that was just at the bottom in the comments of this article, he included that just to say kind of every scenario. I'll scroll through. At the time, it was $8 per share, and he said target price of 17. So he was taking that lower bullish aspect.
Conservative bullish. Okay.
Yeah. So his opinion was $17.06 per share, which at the time was about 100% upside, and still seems possible, I guess.
Jason's asking, why not just sell everything but the crown jewel 5 assets, pay off or refinance debt, and then joint venture with an awesome huge developer and make huge money long term?
I think that's exactly what they're doing. At least I think,
Yeah, but they're not retaining the 5.
Yeah, they're liquidating everything.
True, but
this is what it sounded like they were originally doing.
Yeah,
but development is hard.
And that's a more extreme version of what they were originally looking to do.
more consolidated. And he goes further. If you own these 5 crown jewel assets, wouldn't you hate selling this market? I will say that even though there's a lot of fear, like real estate is still very expensive. So historically speaking, so it's not like they're getting some historically horrible bottom of the market sort of sale price. It's still quite high. It might take a little longer with higher interest rates, but it's not like prices have crashed or anything yet. It could happen. But why not? Because development's hard is my only real answer, and expensive, and they have the time clock to worry about. So it's probably just easier to just liquidate and call it a day.
Yeah, seems like Eddie's kind of over it as well. So.
Right.
So what happens to Andrea Olshan after all this, Tom? Does she go back to
the family biz?
She probably, I don't know, does a new home renovation, and then they prioritize another celebrity over her, and they do an article on it. I'm not sure if you guys saw that. She hired some fancy interior designer, and then they went and did Meghan Markle's house first instead, and Andrew wasn't very happy about that.
Wait, what? Is that right?
That's a true story. Yeah.
That's on YouTube, right? Or something?
I'm not sure. I saw an article about it.
I'm sure you didn't pick that up at your Berkshire meeting gossip. That's
Nah, that was a while back.
I hadn't heard of that. That's funny. Yeah, she'll take a nice boat out to the Mediterranean and take a nice vacation, and then come back and do whatever, as probably most of the board would.
Yeah, I mean, if this all goes through, she'll make, I don't know, roughly a double on her Seritage holding. She's
and whatever else she might have, any options or anything like that.
Yeah, so that's from her compensation package.
Okay.
She hasn't purchased in the open market.
Yeah.
Tom, you added to your position, right? Like I think when it was in the low 7s or 6, somewhere around there.
Yeah, more like 9. But
okay.
Yeah, before this news was announced, maybe 2 or 3 months ago or something.
It's crazy how the price has gone literally from like 9, 10 down to 5.
In a roller coaster.
In like the span of 3 months, 3-4 months. Yeah.
There's a question there from Jamie Miller. If you can pull that up recently, Jack. He said, if you expected $17 a share as a fairly likely price and you accept the 18 to 36 month time frame, would there be a price near term where you would consider selling? I don't own Seritage, so I'm not sure if he meant buying or selling there, but either way, the reason I don't own it is I'm not convinced in the time frame. The value of the properties is, like, I could accept a $17 per share. I haven't done the work to know if that's definitely right. But I think it's fair enough to assume $17 per share. But the time frame and the ability to actually sell those properties is why I'm not buying. I guess that's the main risk in my opinion, and why I can't really get over the line.
So you were, if I remember, you were in it at one point, Frank. What caused you to get out?
Long time ago, well, a year and a bit ago, I guess. I was in and out within a month, and pretty much I just didn't do the work. Wasn't comfortable with the position, the debt, the actual value of the properties. Yeah, it's one of my. Although I didn't lose any money, like 3 or 4%, I think, maybe a little bit more. One of my bigger mistakes, just because the work wasn't done before I entered the position, I guess.
Cool. And yeah, just to answer that question from Eunice on recent sales, they did one like basically the day that this news was announced, which was Westminster Mall. It's like one of 160 properties, so don't read anything into it. But I think that was like a $46 million sale. I recall having it comped in my valuations from earlier in the year at like 48 million. So that one was pretty close. But there's been some above, some below. It's
Nostratam right there, seeing the future.
Yeah. If you want to hire my crystal ball, I'll happily lend it out to you.
That just shows you how little cap rates have changed even today. So a lot of these deals take months for especially a big one like that. So prices are pretty sticky for a while with real estate typically.
Yeah, but they put that big chunk of 30-something retail properties on the market only in the last couple of weeks. So it'd be interesting to see what happens with that.
Yeah.
Yeah. If there's any subscribers, by the way, that see a Seritage property sale, please message me as soon as possible so I can see what's going on. I like to have finger on the pulse with this stuff.
Do the work for him is what he's saying.
Yeah. It's the biggest advantage of being on this platform. So people send ideas all the time.
Yeah,
it's great.
It's easy to miss that type of news.
It's often how I find out about news on any of my positions or anything that I've talked about is a DM on Twitter or something. I'm like, oh, good to know.
Speaking of which, join the Discord if you haven't already. Same sort of deal. That is linked in the description. Any last thoughts on Seritage? Maybe we can go over some other questions, perhaps.
Is it still lower than anyone's cost basis, or is everyone in the green? Whoever's invested. Jack, you're not in it, right?
No, I just have my one loan sold put that is no longer in the money. So just one.
Brad, what about you?
Yeah, I
Are
bought
you in the
around
green?
10, so I'm slightly in the green.
Yeah, I'm down a little. I think my cost basis is in the 13s. But I've bought as high as like 15 something and as low as 9. So, but on average, yeah, in the 13s, I think.
James says management and debt make investing hard. Correct. Among other things, but those are two of the bigger ones for sure.
I guess I'm curious to hear from you guys. Has your cash position changed based on what you're seeing in the markets, what you think might be coming? You have your macro hats on.
I'm foot on the gas, buying a house. It's probably, maybe call me reckless.
Yeah, I put an offer on a house today, Jack.
Yeah.
So I'm right there with you.
Let's keep spending the money. Spend the money. I would actually like to have some more cash right now. I just took out some, as I announced today in my M1 finance video. I took out some margin to cover the down payment for the house in Houston that we closed on. I'm going to be dishing out probably 70 plus in rehab. So it's going to be significant over the next few months. And I would definitely like to not have to dip into debt to do it, but that's the risk I take by being fully invested. So I just got to keep a close eye on that cash flow position, because you never know when something's going to go wrong.
You have some good contractors on your side there, Jack. It's probably hard to find good contractors.
No, I'll reserve judgment until all the work is done. But so far, it's been very good. I got my both AC units, 2 furnaces, and they rerouted the attic HVAC stuff, and that was great. And I talked to them for quite a bit. I was alone at the Houston house Monday through Wednesday, kind of letting contractors in and out all day. And so far, everyone's been nice. Pricing has been reasonable, and a lot of people can work quickly. So far, so good. And they've all come via recommendations. I got a few recommendations, got a few quotes for some of the bigger jobs, and everything was lining up as it should have. So as far as I can tell, no one is scamming me.
I imagine the weather was quite tropical while you.
Oh my goodness, it was 103 degrees Fahrenheit. I don't know what that is Celsius, and
30.
That was
sounds
wild.
like a lot.
That was wild. That's like Australian desert hot, but with humidity. So it's crazy. I had my first Houston power outage as well for a couple hours while they're working on everything. Because I guess the grid is so overworked right now because they're having like record heat. And all the people like me from Chicago, California, New York moving in, putting pressure on the grid, and they just keep building out. So
you have to get a generator or something.
Yeah, I didn't have anything set up yet because it's empty. So yeah, I'll have like at least a gas generator. My neighbor had like a big beefy one that installed in the ground. That it's pretty commonplace down there. I might do like a solar battery thing. I'm considering. We're gonna have to replace the roof soon, and I'm considering doing something like that, like solar with a battery backup or something.
Yeah,
I don't know how expensive that would be, but it could be worth it. Anyways, that's enough about that. Cash positions. Anyone else?
Yeah, my cash position's higher than it's ever been, but not making a macro call, I guess. It's just I haven't come across something to spend the cash on. So I'm sitting at about 13-14%. I forget, but roughly around that range. And I like to be fully invested at all times. So if I don't find a good idea soon, it probably goes towards a rebalance shortly. But yeah, it's not the macro causing me to do it, I guess.
Right.
I've transferred all my cash position into Berkshire, so that's a savings account within the portfolio. So that's how I've kept it. Yeah.
Nice.
When did you get into Berkshire? What was the price to book?
I've been buying, like, I think my average cost right now is close to around 290, a little bit less, 289, around that much.
Uh-huh.
How about on the A shares?
Yeah,
He's got a few dozen at least,
yeah, a couple, yeah, a few.
just for fun.
But yeah, it's roughly like a 16% position right now. So just kind of building it up.
You better get to the meeting next year then, Karan.
That's
Of
right.
course. Aren't we holding like the punch card investing meetup at Omaha next year?
We should.
That's where we're going to launch the SPAC, I think.
Yeah, right.
Absolutely.
Yeah,
Blessed
The
by
SPAC is
Charlie.
still in the
Yeah.
works. Stack is still in the works. Now we're going to be hiring an investment manager soon. We're hiring a shorts editor first, but then after that, we're going to get some bankers on board.
Maybe just before we get too far off Seritage, one final thing I'd say, whatever your view is on Seritage and whatever way you intend to vote your shares if you are a shareholder, I would just, particularly if you're not a US investor, I would just seriously like spend some time figuring out the tax situation if these distributions do come out, because that's going to be fairly material to your return, whether those are taxable or not.
True.
Yeah, so
True.
just a note.
It's a good point.
These dividends would, I mean, I'm assuming they would be return of capital, right? They wouldn't be ordinary dividends.
Yeah,
Yeah,
according to if they get that special vehicle, right?
Yeah, so they laid it out. If you're a US investor, I don't even know if they're called a dividend, but cash distributions up into your cost basis aren't taxable, and anything above that is basically subject to capital gains tax. That's the situation for US investors. But yeah, if you're international, there's all sorts of different rules depending on what country you're in. So figure it out for yourself. Get an accountant
When are
or
we
something.
going to
if
get
you
some
don't know much.
clarification though from the management? Like I think this month or next month regarding the property sales and how everything's going. Pretty much.
Well, they must be due for a quarterly earnings update soon.
I think within the next 2 weeks, probably.
Yeah, or a quarterly losses update, I should say. Yeah. Should we do questions?
Sandeep asked regarding the cash question. No savings for rainy days? If Frank was in here, we could ask. I do have reserves. I say that I'm fully invested, but I have reserves for every property. So like I have cash. I just pretend like it doesn't exist because it's really for actual rainy days, like if a roof needs replacing or there's vacancy or something like that. So for the properties, for sure, I've got reserves built up that I don't count on my net worth. I just count it as like prepaid expenses in my mind and in my calculations. So I do, and I'm sure all of us do.
Yeah, Sandeep, I think like we're all super conservative. I don't know if you know us, but like
It depends on who you're talking to, because like if you compare us to the average populace, like we're probably extremely aggressive. Like people don't compare to people who don't invest at all, and so I don't know what you call that. People live literally paycheck to paycheck, huge lifestyle inflation, all that. So
it's much higher risk than what we're doing.
Yeah, right. It depends on what you're talking about. Like they're not taking any investing risk, but they're taking other risks. So like depends on what you're going for.
Yeah. Hey Jack, can US property investors get, so we have this concept of an offset account. I'm not sure if that's a thing in the US.
What is it?
It's basically so the average New Zealander, and probably similar in Australia, might have a portion of their mortgage on a variable rate, and it's sort of like a line of credit. So if you have if you have cash come in, you can put it in that account, which sort of temporarily offsets your mortgage, but you've still got access to that cash if you want to pull it back out again at any point.
Wait, so like it's just a revolving line of credit, or you're saying it's an account? What do you mean?
Yeah, essentially it's like a line of credit, but you can it's pretty common over here to have that as like a chunk of your mortgage in that form.
Yeah, that's what I have on my my former primary residence.
Gotcha.
I have it's a home equity line of credit, HELOC.
Yeah, true.
And it's a revolving line of credit. So I use that kind of like a savings account, kind of. And I just pulled out like 15 grand from that to fund part of this rehab, and I'll continue pulling from that. And then a lot of my new cash as it comes in will go towards that. So yeah, we do have that, and it sounds like that's the same thing.
Yeah, I think it is. That's just something I'm just obviously thinking about a fair bit at the moment, because I'm going to have to figure out how to structure some of this stuff.
So you would get, so like a portion of your mortgage would be whatever your fixed rate term is for a few years, and then the other would be a variable rate line of credit, like right off the bat.
That's the plan.
Interesting.
I think, yeah.
Is in the U.S. typically you would get like a line of credit or a second mortgage after you did your first mortgage for like a primary residence. And when you get to commercial, you can get more creative, and you might have a bunch of lenders lined up to do certain things. But typically, there's kind of one primary lender, and that's it. And then if you want to get extra stuff later on, then you do it. I think the big reason is because if you're already 95% leveraged, you typically can't get any second mortgage products, that you just won't get approved. You typically need 80% equity, but a lot of the first mortgage products out there are like what I just got, the 95% leveraged, ridiculous. Like,
Yeah.
So like, you got to be careful, of course, but I think that's probably why it's not that common.
Yep. No, cool.
Off the bat, not that HELOCs and second mortgages they are kind of common in the US, but it's for kind of people who've owned their homes for a little while, typically, or if there's been big appreciation.
Jack, do you have a target of how many properties you want to have in the next 5 years? Have you thought about that?
I don't really think of the number of properties. I just think of the net cash flow. That's really what I'm going for. If that's 100 units, if that's 10, it doesn't really matter.
What's your cash flow number?
Well, it's the $30,000 in passive income, of course, that I'm documenting on the net worth series. But I should probably inflation adjust that by now, because it's probably more like 40,000 I gotta get to per year. So right now I'm bringing in like $1,100 a month, and it'll probably turn into $1,200 or so once I rent this place out. And like that's a good start right there. And I can start to limit some of the expenses by paying down some debt too over the next year, especially once my wife starts working full time, which will be great. Get that dual income going, and we can start paying down debt more aggressively.
Are you able to raise rents in line with inflation, or do you have some rent control properties?
I don't have any rent control properties. Chicago is not rent controlled. Indianapolis is not rent controlled yet. It could always change. And then Houston most certainly is not. So if I ever rent the place I have right now, things could always change. But right now, no, I don't have any of those restrictions. So yes, I can keep up with inflation there, which should limit that risk.
Cool.
Sweet.
Yeah.
There's a question here from Hodder Prime that it's a REIT. SRG is a REIT. Yeah, it's not a REIT anymore.
Yeah, it's
So
not.
Used to
again, like, make sure your tax situation is sorted out, just in case.
Yeah.
Hey,
I'm back.
he's back.
What's your favorite Chili's song?
Red Hot Chili Peppers, Under the Bridge.
Nice.
That's a good. I'd agree right there. I would very much agree with that. A guy on my baseball team in high school. He had "Can't Stop," the beginning of "Can't Stop" as his walk-up song, and it just worked so well as a walk-up song, like that like drum roll at the beginning.
Yeah.
I never liked that song until I saw that in action. I'm like, that's actually kind of awesome. So,
Was that a question we got in the chat?
no,
No, I just saw your shirt.
Can we take one more?
Sorry, you want another song or another question?
Both.
What's your second favorite?
Zephyr song is, Zephyr song's probably number 2.
Good.
Californication is what got me into them. So late, but don't know. Under the Bridge is the best song by far.
Yeah.
Nice.
I'm going back to some of our early messages. There were some questions up there. We got a comment. We look colorful today. It's probably because of Tom's orange background.
Yeah, there was a comment. Somebody thought Tom might be in the metaverse.
Oh, I did see that earlier too.
Yeah, that was from Jason, I think.
Yeah.
Is that true, Tom?
Yeah, it's an easy double in here as well. I'm not sure if you guys knew that.
An easy tell. Nice. Not sure how many people will get that one, but
Should we talk about Twitter drama at all?
Oh, God.
ooh,
We mentioned it last week, but that's
there's a
always
can of
fun.
worms.
Let's. Oh,
Oh dear.
yes, we've got a cat making his debut.
Nala on the stream.
I thought you were gonna say like Warren or something.
I wanted to get a boy cat and call it Charlie, but
Yeah.
the fiance didn't go for that one.
What about Brett?
Yeah, Kelly the cat. Kelly the cat works.
Oh, Kelly would have been good. Actually, should have tried that one.
Should we make predictions on whether or not we think this Twitter deal is actually going to go
Whether
through?
the deal gets forced through or somehow gets renegotiated?
Give us your professional opinion, Jack.
I have not looked at any of the claims, but just my knee jerk reaction. I think they'll settle on something. I don't think they'll actually see it through. Like, I highly doubt they're going to they'd actually get to the point where the court would force a sale, which might not even happen. I'd be pretty surprised, but I'm totally spitballing. I'm not too sure. Because this is a very strange case to begin with. Not a whole lot of precedent of this sort of behavior with Twitter and everything, and world's richest man. Wild.
Yeah.
Just
Guy
from
kind of
following-
nailed the timing, I think.
He
Just
sold
from
out
following
right when the
paper.
announcement happened, right?
Yeah.
So Andrew Walker and Jeremy Raper, two people on Twitter that are pretty respectable, both have positions and are pretty confident the Elon will be forced to fork out the 44 billion or whatever it is. And no, like obviously I haven't done the work, so no comment on whether or not that is true, but they're two people that I would respect their opinion at least anyway. But I think even if it doesn't, the probability, like maybe there's a special situation there where maybe it's worth a certain percentage of allocation, depending on your investment style and risk tolerance and all of that, I guess. But at the current price, even if the deal didn't go through, I don't think it's overly expensive by any measure. And then if it does go through, then I'm not sure the spread at the moment, but it'd be a lot of upside if it were to be forced through. So
There was a good Patrick Boyle put out a video today going over some of the portions of the claim and kind of what this whole. He gave a quick high level overview of what's going on with some finer details as well. So definitely check out his channel for today's video. He's literally on the beach in a suit. It's pretty funny. Amazing dry humor as per usual.
I wonder if this is Buffett's latest
What did you
workout
think?
on Twitter.
It-
Activism
it's what?
on Twitter.
What
His
did
latest
Patrick
what?
think? Did he say that is likely to go through, or
He didn't offer much of an opinion there. He just kind of laid out all the details on kind of what's happened to this point, and what both sides are claiming, while telling constant dry jokes the whole time for his usual content. Because it really depends on what direction they go with. Is Elon just trying to get a lower price? Is he actually serious about backing out? Was he serious about anything? So there's a lot of unanswered questions that we'll learn about as it goes on. So
I think there's no bad outcome in this entire scenario. Like overall, net, there's no bad outcome.
so every outcome is good.
Yeah, I think so.
Elon buying, Elon not buying, Elon paying a penalty, Elon not paying a penalty.
I think it could be a lot better, not controlled by the existing management.
So we just hate current Twitter management. That's fair.
Yeah, if Elon settles, it'll be the first time that Twitter actually makes some money. So piece of shit company. Yeah.
Yeah.
And if it was just the $1 billion buyout fee or whatever, it's like $1 billion in huge income. Look at that income growth.
I see owning it has taken its toll on you, Karan.
Yeah, it's completely like changed how I look at management. Like, yeah, big time.
Yeah. What else we got? Any last
Yeah,
questions?
let's get a non-Twitter question. I'll selfishly take this one. My portfolio allocation for real estate and stocks heavily towards real estate, and you can check out the net worth series for my net worth spreadsheet. I don't know the exact percentage, but
Like 80-20.
when you count, if we're just looking at equity, it's probably pretty not far off. But if we're looking at actual asset value, it's way higher.
You and your bank partnership.
Yeah, I did note. So long as everything holds up, I crossed $1 million in assets, but I also have like 900 something in liabilities. So it's is it really my assets?
Needs more leverage.
But I was weird. I punched in the property into my tracker spreadsheet. I was like, whoa, like I'm over $1 million. It's kind of weird. Could easily fall like quickly, but it's just it's weird. It's weird how leverage can accelerate things.
OPM.
Yes.
Yeah.
Now, if I just pay off all the debt and do nothing else for the next 20 years, then I'll be in great shape. Have $1 million net worth if everything else holds.
Yeah. You would hope those properties are going up over 30 years.
Yeah, or just hold. I never factor in appreciation, but it would be much appreciated. Get it?
Hey, I like that. Can we get do you have anything on your soundboard?
No, I don't have it. It's just whatever streamer it has. They just have music, and I have Hallelujah in there for which I've now used twice, which is fun.
When Quran turns up.
Yeah. Whenever we have all 5.
Is there any other company that you guys are looking at the moment? Anything interesting that's coming up on your radar?
People have mentioned Thor in the chat.
Except Thor, yeah. Which is
Are people looking
Jason's
to buy Thor?
obsessed with.
Yeah, never heard of it.
Besides Tom, we know what Tom's doing with Thor, but anyone else considering Thor?
Are we going to replace Seritage with something else? Like maybe we can start discussing at some point because it's not too far.
We're getting close. But what about the Punch Drunk portfolio?
We'll get our $29 of dividends first.
Punch Drunk though, we have to figure out a replacement for Tontine. This Tontine Holdings is liquidating, or you're getting your cash back.
Yeah.
So what are we going to do there?
You go from SPAC to cash. Yeah.
Just leave it as cash.
Voyage is pretty good.
Well, I already have a cash position in there, I think.
Yeah.
Maybe treasuries. Can you do a U.S. Treasury fund?
I wonder if there's someone
I
out there
think
who's
that's
buying
what
bonds.
Brad's got.
Yeah.
What's that, Karan?
No, I wonder if there's someone out there who actually thinks like, oh, I should buy bonds at this point. Like,
yeah,
I think we had a comment.
central banks.
Yeah.
Central banks. That's who buys bonds now. That's why they're so expensive.
Yeah. A fair bit of your portfolios in bonds, Karan, now with that Berkshire position.
well,
They're short term though. They're not like.
I mean, the rate at which
They're
he's
as short
buying.
as he-
Yeah, he's buying Oxy like it's like there's no tomorrow. Like every
it's
other
Oxy,
day we see a notification. Buffett has bought more
buying
Oxy.
Oxy like it's Oxy. It's addicted.
Yeah.
He's putting that cash to work at least.
It's a very American joke.
Yes, yes, it is. Sadly.
I was taking a look at Hingham, but it's risen back up a little bit. I'm not sure if you've had a chance to read their earnings from overnight, Frank. It's kind of interesting to look through.
But yeah.
Yeah, they've got a few short-term headwinds, but the stock went up.
It got pretty cheap there for a while.
Yeah.
Jack, is Total Beach doing anything, or is it just still
Falling.
coasting? Coasting.
I haven't heard any updates recently. We shall see.
Yeah, potentially, like Total Beach could be bought out. Seritage goes off, so we'll have a lot of cash freed up. So,
True. That'd be something. Both like liquidate at the same time. I think Turtle Beach would probably it would merge. It wouldn't be like. I doubt it'd be pure cash. You'd probably get shares in whatever acquires them. I would guess, but that's all assuming they even get acquired, which may or may not happen. Maybe final question: who still owns Baba?
Of course.
Don't all of us?
Charlie does. That's who.
Yeah. I think we all do.
who sold Baba?
I'm not told.
Yeah.
Is
I'm
anyone?
at like my cost basis now, though,
I
which
was
is
going
kind
to
of
say,
cool.
is anyone positive? I think I was for a while. I don't know the current price.
I think like it's around 100 or 99, something like that.
I
Maybe
think
I'm
Rob
down
Banal
slightly
might have
again.
sold his Baba, or it's just tanked so much that it doesn't show up in his top 10 anymore.
So he rolled it into Carvana,
Yeah.
Yeah.
possibly. Don't know.
Double down.
Final thoughts before we wrap up on whatever. Anything you got to get off your chest?
Get an accountant.
That's a good idea. Yeah, I'm pretty tired. It's time to go to bed. With that said, everyone, thanks for coming by. As always, like, comment, subscribe. It goes a long way towards helping the channel. So does looking at those discount links in the description below for ShareSite and for Seeking Alpha. You can get a discount on their premium subscriptions. You can also check out the free versions of both of those while you're at it, using our links, of course. Be careful out there, and don't over leverage, because that's not a good idea. And with that said, take care, everyone.